Welcome everyone, and thank you for joining. The topic of our webinar today is proposed revisions to National Instrument 43-101, Standards of Disclosure for Mineral Projects. My name is Julie Frez. I'm an accountant in the Corporate Finance Division of the Ontario Securities Commission, and I'm the coordinator for the OSC SME Institute this season. Before I pass it over to our presenters for today, I'm going to cover a few housekeeping items. This session is being recorded, and the recording will be available on the OSC's YouTube channel following today's presentation. A copy of the slides is available as a handout through GoToWebinar. You should be able to download that from the PDF from the side panel. You can submit questions throughout the presentation using the chat feature, and we will be answering them at the end of the webinar. If for any reason we cannot get to your question, we will reach out to you after the session. You will receive an email with a survey after the session, and we would appreciate your feedback. And at the end of the session, you will be able to screenshot proof of attendance for any continuing education requirements, so just look out for that. At this time, I'd like to remind participants of our standard disclaimer. The views expressed in this presentation are the views of corporate finance staff and do not necessarily represent the views of the Commission. The presentation is provided for general information purposes only and does not constitute legal, accounting, or technical advice. Information has been summarized and paraphrased for presentation purposes, and the examples that have been provided for illustration purposes only. Responsibility for making sufficient and appropriate disclosure and complying with applicable securities laws remains with the company. Information in this presentation reflects securities laws and other relevant standards that are in effect or are being proposed as of the date of this presentation. The contents of this presentation should not be modified without express written permission of the presenters, and this document should not be distributed externally. For any of our attendees who may be new to the OSC SME Institute, just a little bit of background. The objective of the OSC SME Institute is to support small and medium-sized businesses in facilitating cost-effective compliance through issuer outreach and education. It is important for issuers to know securities regulatory requirements, and we are here to help them navigate regulatory waters. The idea is that if we can help issuers to better understand and comply with their disclosure requirements, they can focus on their resources on building their company. Ultimately, we both have the same goal, and that is for issuers to provide appropriate and meaningful information to investors to assist them in making informed investment decisions and to stay onside regulatory requirements. Lastly, I wanted to take a moment to remind everyone of the topics we've covered in recent SME webinars. Each of the sessions listed on this slide have been recorded and posted on the OSC YouTube channel. The continuous disclosure webinar reviews and discusses deficiencies commonly noted by staff in continuous disclosure filings pursuant to a reporting issuer's disclosure requirements, including those under National Instrument 51-102, continuous disclosure obligations, and National Instrument 52-112, non-GAAP and other financial measure disclosure, and provides guidance to assist issuers with reporting obligations. The prospectus webinar provides a general overview of the prospectus regime and reviews certain prospectus exemptions available to SMEs to help facilitate capital raising. The webinar also discusses common issues identified in prospectus reviews, including concerns regarding a reporting issuer's financial condition. The CDR Plus webinar provides some practical tips and insights on navigating CDR Plus filings effectively, including profile fee management, continuous disclosure challenges, prospectus filings, exempt market filings, and application filings. And finally, the Problematic Promotional Activities webinar covers CSA Staff Notice 51356, Problematic Promotional Activities by Issuers, the use of social media and press releases, forward-looking information, and other promotional disclosures with respect to greenwashing and climate-related disclosure. I will now pass it over to our presenters for today's SME topic.
Okay, thanks, Julie. And good morning, everyone. Thank you for taking time out of your busy day to be with us. My name's Craig Waldy. I'm a senior geologist at the Ontario Securities Commission. I'm here with my colleague, Chris Hachowski, who is also a senior geologist at the Commission. Our role at the OSC is to review disclosure by mineral exploration and mining companies for compliance with National Instrument 43-101, Standards of Disclosure for Mineral Projects. Prior to joining the OSC, both of us spent a significant amount of time in the industry, working both in Canada and internationally. The agenda today is basically made up of 3 topics. There's the Securities Commissions in Canada and background on 43-101. So this just provides a framework for everyone to understand how the commissions work within Canada and a little bit of the framework of how 43-101 has evolved over time and its sort of purpose and goals of the rule. I'll start off then with some summary of proposed changes, and Chris will talk a bit about more of the proposed changes and proposed amendments, and then Chris will finish off with next steps, and Julie will come back in at the end. So for securities commissions in Canada, it's certainly kind of important to understand how that whole system works, because it is unique across the world. So Canada, it's important to understand that Canada is unique and it doesn't have a national securities regulator similar to the SEC in the US. So securities commissions in Canada are regulated at the provincial level. So there's 13 provincial and territorial governments, each with its own securities commission. And they're generally self-funded through market participation fees. Because there are 13 different commissions, we need to allocate a principal regulator for each company, which is generally determined based on the location of the company's head office. So you could think of Barrick being based in Toronto, so they're overseen by the Ontario Securities Commission, whereas Teck is based in Vancouver, so they're overseen by the BC Securities Commission. The 2 main provinces that regulate the majority of mining companies are BC and Ontario. There's approximately 1,590 companies. 90% are regulated by BC and Ontario, but BC regulates probably 65% of them. They have the bulk of the mining issuers, followed by Ontario. And the other 10% are regulated by BC, Quebec, and a couple other smaller jurisdictions. So because we have the 13 different commissions, there needs to be some type of a way to coordinate and harmonize the different commissions, and that's through the Canadian Securities Administrators, known as the CSA. The CSA does not have regulatory powers. They're more of an umbrella organization, but they do help coordinate the provincial regulators to develop national rules, such as National Instrument 43-101, and to put out CSA notices, which is the notice we put out when we put out proposed amendments. It was the CSA staff notice on proposed changes to 43-101. So NI 43-101 has been around for a while, but the main objectives are quite simple. One is to enhance the trust and credibility of mineral project disclosure that's presented to investors. It's also meant to sort of foster accountability of the professionals that provide that information so that they're accountable for their judgments and their opinions. And it's meant to empower investors to make decision useful. They're provided with decision useful information to make informed investment decisions. And these objectives are met in various ways, but the general approach here is how those objectives are meant to be met. So issuers' mineral project disclosure must be prepared by a qualified person. So this is a professional with the education, the experience, and they belong to associations or a code of ethics. So there's an individual that's accountable. The information must be understandable, meaning it must be in plain language. It can't be all just technical jargon. It needs to be understandable to investors. It's standardized, meaning it must use standard terms and definitions set by industry. So everyone understands a mineral resource means a certain type of estimate. So that's the standardization. Balanced needs to be good information and bad information. It can't be misleading, and reliable. So the information needs to be verified that it is something that can be used and disclosed to the public. The little box off to the side on the right, misconception, still after 24 years, there's still a lot of people that assume if there's a technical report prepared under NI 43-101, that it certifies a project's viability. It certifies that it's a good project, and that's not what it does. It's only a mechanism for disclosure. It doesn't certify anything as far as the viability. little bit about the history of National Instrument 43-101. So it's been around for 24 years, since 2001. There was some work done in the mid to late 90s to codify some existing policies. And in 1997, things happened which people are mostly aware of, is the BRIEX scandal. And post BRIEX, the Ontario Securities Commission and the Toronto Stock Exchange put together the Mining Standards Task Force, which put out a series of recommendations which basically evolved into National Instrument 43-101 in 2001. There were some minor modifications in 2005, more significant modifications in 2011, mostly related to the technical report form. And there was also some changes we made which inadvertently caused some unintended consequences, and that was around the disclosure of PEAs, which are preliminary economic assessments, which required us to put out a staff notice on that in 2012, and that was staff notice 43307. And that brings us to where we are today. This is the third series of revisions or amendments to National Instrument 43-101. So it's been 14 years that the existing rules been in place. In June, we published proposed amendments, and that was open for a 120-day comment period, and that closed mid-October. And we're now in the process of going through those comments, considering the comments. There's approximately 79 of them, and they are posted on the OSC's website. And they vary from like a one-paragraph comment to 135 pages. So there's a very broad range of comments. This slide basically provides an understanding of how there's a linkage or there's a relationship between regulation and the industry. So there's a dashed gray line through the middle. Everything below that dashed gray line is things that are established by the industry. That's the Canadian Institute of Mining, Metallurgy, and Petroleum. So they set the definition standards and they set the practice guidelines. Everything above the gray line, the gray dashed line, is set by the regulators, set by securities commissions. So that's the legal part. There's the national instrument, which are the rules about how disclosure can be made and how technical reports, the timing of them, who has to prepare them. That information is in the rule. And the other part that's still a legal requirement is the technical report form. So there's the legal component, and you can see that under the national instrument, Canadian Institute of Mining and Metallurgy definition standards, we incorporate by reference those definition standards. So they become part of law. So the definition for a mineral resource, mineral reserve is actually part of law, being incorporated by reference into National Instrument 43-101. And then there's the guidance side of the ledger here. We put out a companion policy about how we interpret the definitions and how we interpret the rule to be followed. And CIM puts out practice guidelines about how practitioners should think about what to do when they're doing a mineral resource estimate or a mineral reserve estimate or working in a certain commodity. But that's sort of how the mechanism is meant to work, where there is a partnership, but there is a legal requirement and a policy or guidance side of things. So the law must be followed, whereas the guidance should be followed. And there are basically three core principles. There's many principles, but it could be distilled down to three core principles. There's the qualified person, who is really the foundation of 43-101. And if the qualified person doesn't understand their role, the whole system basically falls apart. So they're really a gatekeeper in the whole system for investor protection and keeping or maintaining confidence in the markets. So all disclosure of technical information by a mining company must be prepared or approved by a qualified person. And that's where the sort of the catchphrase below it, disclosure with professional accountability. It's up to the individual to know what to do and how to disclose it correctly to the market. And there's the CIM definition standards. So we just talked about that a second ago, where those definition standards are incorporated by reference into national instrument. But those are key main definitions, again, around what is a resource, what is an inferred resource, what's a measured resource. There's all these different sort of terms. Those are definition standards set by industry. Then there's the technical report itself, which is a publicly filed document using a prescribed form. And there's certain timeframes when those technical report must be filed on CDR+. And again, it needs to be signed off by a qualified person that may need to be independent of the issuer. So now we'll go into some of the summary of the proposed amendments. This is just very high level. We'll only talk about a few of them, but we'll touch on sort of some of the key proposed amendments to National Instrument 43-101. So this is just to show you, this was the staff notice. So you notice it's a CSA staff notice. So all the jurisdictions participated in preparing this, but it comes out as a CSA staff notice, not an OSC staff notice or BCSC staff notice. It's a CSA notice. So there was proposed changes made to the instrument, which is the rule itself. The form, that's the form for a technical report, and the companion policy, which is the guidance document that we talked about earlier. So those three were modified or made as proposed changes. There's always consequential amendments because all these rules do interact with each other in some respects, such as in a prospectus and things like that. So there's some consequential amendments. And Ontario is required to put out a cost-benefit analysis. So that's included there, but it only looks at Ontario issuers. It's not looking at all issuers in Canada. And the comment period closed on October the 10th. As I mentioned, there's about 79 comment letters that you can see. They're publicly filed on the OSC's website. If we look at the goals of the revisions, they're pretty straightforward, but they can be distilled down into sort of 4 key areas. Modernization. So it's been, as I mentioned, it's been 14 years since the rule was last amended. So the concept was let's update it, maybe streamline, get rid of certain things that are not required, and make sure we can reflect where the industry is today, the current practice and standardization across Canada, because there is some changes within CIM. They've made changes to their definition standards. We wanted to make sure things that were modernized at a high level. Harmonization. So Canada isn't the only country that has rules around mineral project disclosure. The US does, Australia, South Africa. So the concept was see if we can provide greater alignment with the international disclosure regimes in those countries to the best that we can. We can't always harmonize 100%, but try to align where possible. Clarify. So the clarification component, that's basically to make sure that our definitions are clear. And maybe we need to enhance and provide more guidance around how the information, how QPs and how companies can understand what the definitions are, what the rules are. And we also provided maybe additional guidance on how technical reports should be prepared. So the clarification component was part of the goal. And finally, just make sure that we preserve Canada's existing leadership role in global mining capital formation and standards for mineral projects. And that the companies still provide investors with decision useful information. So the focus was not around making significant additions to the rules. It was, as I mentioned, more related to removing outdated components, clarifying or correcting areas that were causing confusion, and focusing where we could on aligning with other codes internationally. So one of the main things you'll see if you have looked at the proposed changes is there's quite a different look in the numbering system. So it used to be the rule was provided as parts and subparts. So it'd be 1.1, 1.2, 1.3. It's now consecutive. So it's 1, 2, 3, 4, 5. So that's a major change. As an example, the trigger around filing of a technical report for first-time disclosure of a mineral resource estimate used to be started with 4.21. it's now 16.1. So there's enough, it's the rule is the same as far as the wording, the numbering system has changed though. And this just provides a very quick visualization for people to understand a little bit about where things have moved or renumbered. It's not meant to be, you know, the main changes, but it's just a quick visualization. So there's the new numbering system. So you can look at under the rule here under part 3, where it's in 2011, which is on the right-hand side, says written disclosure to include the name of the qualified person. 3.1 is now section 10, name of qualified person. So there's a renumbering, but there's also a sort of streamlining of the description for each section, where it used to say written disclosure to include name of qualified person. We just now say name of qualified person to try to simplify it and make it a little bit easier to understand. There's also text that's in blue bolding. That's at the top of the 2011 version. Those have been sort of condensed into a new section called CIM defined terms. So where there used to be those individual headings, they've been condensed. So it's just this is just a general way of showing you how things have moved around. And this is just a continuation of that to show you where in this one, there's a couple areas where there's a strike through, like 6.3 on the 2011 version said maintenance of records. We deleted that sort of discussion because that's not a disclosure issue. It's more of a practice related issue of how you maintain your records. It's not a disclosure issue. And part 7, use of foreign codes, because we proposed removing that, it's no longer exists in the 2025 version. So with that, I'll pass it on to my colleague, Chris, who will continue with some of the other proposed changes.
Hi. Thank you, Craig. I'll start with the new proposed CIM definitions. The first being the term exploration target, which is intended to replace the target for further exploration. It defines a target as a statement of the potential of a mineral resource, and it continues to, it must be expressed as a range of tons and grade related to mineralization that hasn't seen very much exploration or limited work, which would allow it to be classified as a mineral resource. The second term is a scoping study. It will be replacing the term preliminary economic assessment, or PEA. It's a term that in the past has often been misused to disclose projects prematurely and often used as a marketing tool to promote a project. Scoping studies can still use inferred mineral resources, but the resources must show reasonable prospects for extraction, as they had in the past, and include all necessary cautionary language. And purpose of a scoping study can help management decide whether to advance a project once they have certain economic or operating parameters in place, or identify further work that needs to happen in order to advance the project. The last definition is a life of mine plan. It only applies to projects that are already in production. And should include the assessments of modifying factors specific to each project, each component's operational components and financial analysis to help demonstrate that the project has continued production. We have other proposed definition amendments for provide some clarity. The mineral property is being replaced with mineral project. In the past, these two terms are interchanged, creating inconsistency and confusion on what the difference between the two were. Now, a mineral project clearly defines activities related to exploration, development, project, production of natural materials. Early stage and advanced properties has been removed. This is another one that was confused by issuers, especially the ones that had multiple projects at each stage, didn't necessarily know where they stood. Where's the line from an early stage going into advanced project? Foreign codes have also been removed. They already align with the CIM definition standards and closely align with CIM or CRISCO standards, and including foreign codes at this stage is felt to be redundant and added unnecessary complexities. Finally, the thresholds for producing revenues have been updated. Don't have the numbers in front of me, but the intent was to update them to reflect current inflation and economic conditions. The qualified person definition, throughout our comment period, it was probably one of the top issues that we received comments on. So we're going to try to provide a little bit of clarity right now. So professionals moving forward will be required to have 5 years experience after they have been registered with a professional association. This is going to hold for new graduates out of the university program. Now, the purpose of this is to ensure that QP signing off on technical information have the expected level of expertise that one would be expected to have to sign off on whatever item they would be signing off on in a technical report. So to provide an example, we have an individual with 15 years experience in a country that doesn't have a professional body. Doesn't mean that this person would need 5 years experience after they, let's say, come to Canada. They wouldn't need an additional 5 years after they register with one of the provincial bodies. They already have that 15 years. They have demonstrated they have the needed experience to be considered a QP. Another popular comment was the experience related to experience relevant to subject matter. Basically, this means if a QP is signing off on a mineral resource, they should have sufficient experience carrying out a mineral resource. QP should also have experience working in that specific deposit style they're reporting and signing off on. And last, the education requirements have been removed from the rule. This was because the education is accounted for when or during the when an individual gets registered with a professional designation, they check that the necessary academic requirements are met. Few technical report triggers that have been removed. The royalty only issuers will no longer have to file technical reports. Reason for this is these royalty issuers have limited access to all the data that would be needed to be disclosed to the public, and they also have minimal involvement with the property. We found that filing provided no real benefit to the public, since the property, whoever owned the property at the time, would also need to file a technical report. So filing 2 technical reports for one project would be redundant. 2 additional triggers that were removed were the rights offering circular trigger and the TS6 venture short form offering document trigger. Both these are rarely used and have not been used in over a decade. Other revisions, another one to provide a little bit of clarity, another one we got a lot of questions on, was all technical disclosure approved by a QP for both material and non-material projects. This doesn't mean that we are asking issuers to file technical reports for their non-material properties. We don't want that. It's basically reiterating and clarifying what is already in the instrument under section 2.1 A and B, that all technical disclosure must be prepared and approved by a QP. Restriction removed was met positively in the comments was issuers can now add inferred mineral resources to measured and indicated under the condition that they are still disclosed separately. So measured has to have its own line, indicated its own, and inferred, and they, in the end, they can be summed into one. Metal equivalence, further clarification was needed here also. The grade of each metal must be stated, as it always has been. We are including that the recoveries for each of these individual metals also be included, basically to show all the components that go into contributing to the final equivalent calculation and number. For the Indigenous peoples and rights holders and permits, we had received and considered quite a bit of feedback from both Indigenous and non-Indigenous commenters in the 2022 consultation. Most of them had indicated that disclosure of an issuer's relationship with Indigenous peoples should be part of the continuous disclosure record and not detailed in a technical report, as the technical report is meant to disclose technical information on a project. We've also clarified that the term rights holders of mineral project includes Indigenous people to ensure all groups are included in consistency in terminology. To enhance transparency, technical reports are required to have permitting agreements obtained with rights holders that allow work to proceed, and provide a list of sources or web links related to these negotiations. This is in hopes that it will extend the shelf life of the technical reports. Data verification is another one we felt needed further clarification during the amendments. In the past, many QPs have been interpreted data verification too narrowly. We've seen the verification process only being applied to exploration and drilling results. So this is an opportunity for us to clarify that it encompasses all technical data, not just exploration and drilling. It should encompass metallurgy, mineral resource estimates, infrastructure, and basically any technical scientific data that is being included in the technical report. The mineral resource estimates, clear statements of risks and uncertainty specific to the project. In the past, we've seen a lot of generic statements that moving forward are no longer going to be considered sufficient. Don't necessarily want to see boilerplate statements between projects. So the same statement from project A to B should be different because each project is going to have its own risks. It's going to be dependent on where it is, commodity. Reports must discuss the basis for the resource estimate and demonstrating the reasonable prospects for extraction. This includes explaining the assumptions and criteria used, which, again, many of these assumptions will be project specific and may not be similar between projects. We're looking for transparency for the public so the QP can demonstrate they understand the project and convey to the public so they can make informed decisions. Capital and operating costs. Issuers are going to be required to provide expanded details on the cost estimates, and this includes what cost classification system they used. A common one is a CE to determine the costing assumptions for each project, and included in this is the accuracy level for each element or each cost to show the variation the project may see depending on what stage it's at. And to extend what's already required in the rule, the costs and economics should still disclose the pre and post tax outcomes. I'm not sure of any jurisdiction anywhere that has no tax for mining projects. So just disclosing pre-tax isn't going to be sufficient. You do need to show post-tax. Economic analysis. This is another one. We saw the opportunity, especially for the NPV and the discount rate applied to each project. In the past, commonly what we see is a 5% risk-free adjusted rate applied to all NPV calculations. This may be okay for few projects, but many it isn't. There's a lot of factors that go into a risk-free rate, and especially for mining, there are projects all over the world, some of them not necessarily in safe places. So project location comes into play for the risk rate. You wouldn't expect the same risk rate for a project in Canada as you would in, let's say, Africa. Stage of development, same reasoning there. A feasibility stage project wouldn't necessarily have the same risk-free rate as a project that just released a PA. So there's still considerable risks with the PA. Commodity type and current economic conditions is another one that will play in. Current personal inspection. We are proposing to replace adjacent properties, item 23 in the current form, with current personal inspection. In the past, we've seen issuers include properties that are not necessarily close to their own properties. It's kind of turned into almost a dumping ground where issuers have included properties that look good, that they hope will make their project look good. So it's kind of used as a promotional tool right now for their own project. So we have decided to replace this, giving the QPs an opportunity to outline what they have done in their personal inspection, what their observations, recommendations is already in the form, so that will be separate. And it gives them basically an opportunity to verify what they have verified on the project and further illustrate to the public the QP has made the site visit and what exactly they've done. Additional guidance in the QP. We've added up to 50% more guidance to assist QPs in completing technical reports in order that they're clear, concise, and factual. This is to address recurring issues for technical reports in the past that become too long and detailed, essentially making them, again, dumping grounds for every piece of data relating to the project. And that effectively makes them lose their purpose as a summary technical document. Including the guidance helps authors decide what they should and shouldn't include, and to what extent, keeping in mind not to include irrelevant information. So in the past, we've seen very long appendices. Again, it seems like authors are just putting in everything that they feel is relevant. A lot of it isn't. Assay certificates, geostatistical analyses, raw data tables, over 30 pages of resource cross sections are, when we see those, we always make a comment. This is excessive. Nobody needs to see 20 pages of variograms. And finally, the use of plain language should be used. Reiterate, the audience of a technical report is the public. They are not technical experts. Most of them probably have never seen a mine or exploration site. So plain language should always be used in a technical report. And finally, for our next steps for the amendment project, the comment period has closed. It's October 12th, 10th. We're reviewing the comments, all the comments that were received. And the CSA staff will be meeting in the coming weeks to discuss any further changes based on those comments. We are considering all of them. We're not pushing any aside. And after the revisions are complete, our goal is to have the final product published in early 2027.
Okay, I would like to take a minute to thank Craig and Chris for sharing their knowledge and expertise with us today. Before we proceed to the Q&A portion, I want to just point out that we have included a slide in today's presentation which contains contact information for today's presenters, as well as our OSC general inquiries and the SME inbox. Please note that while staff are happy to answer questions, this of course doesn't replace the advice of independent third-party advisors, as we are not the attendees' advisors.